Hello, my name is Eddie Tofvik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Paris milling wheat. Paris milling wheat, for a change, is very different from Chicago, Kansas City and Minneapolis wheat. Here there is one dominant pattern, a quite large pattern that's coming towards its cusp. It is of course the dark blue highlighted late August 2024 to date ascending triangle pattern, currently 231 to 242. It's highlighted in dark blue as I say on my daily chart. This pattern has the requisite 5 touches and is made up from a lot of smaller patterns within it, but is clearly seen on my daily chart. In the past, and I suppose even now, the top side has been capped to a certain degree, and most certainly it's been defined at least by the bright red neckline extension to the June to November 2023 head and shoulders top, currently at 238. This is on the verge of yet again being a support, as it is today. So please keep an eye on this going forward. Now, I cannot give definite targets or definitive targets even topside or below for this pattern, as we haven't had a true break higher or lower as yet. But I can give some idea of the potentials should we break higher or lower. Thus on the top side, primary potential will be up in the 258 area with a secondary harder to reach potential up in the 279 area. Likewise on the downside, we would have a primary potential in the 226 zone with a secondary harder to reach potential down in the 194 zone. Now, a strong word of caution. We are so far advanced along this ascending triangle that the chances of a false break higher or lower are very, very high. So supreme caution on any suspected move in either direction. Now, if we do break higher or lower, what should we look for? Well, because of the size of the pattern, these would be quite away from the current market, but please still bear these in mind, and they are from the same source, interestingly. Topside, I'd look to the resistance provided back in May last year from the 61.8% absolute Fibonacci line at 270. Likewise, I'd look below to the 50% absolute Fibonacci line support, which held up prices, or helped hold up prices in November and early December last year, and eroded the bearish incentive back in August and September as well. This is at 219. Minneapolis wheat. The market here in the past had been a little different when compared to Chicago, Kansas City, and even Paris wheat. However, not so much this time, though I do see some unique features. Right now there are 2, possibly 3 or more major features that I have developed, or should I say are developing in this market. First and by far the largest is the late May 2024 to date possible very large double bottom pattern. We're at this time constructing the second leg up in this pattern. The key to the breakout upwards, I suspect, will be around the 50% Fibonacci line of the May to August 2024 move at 670, though it could also be the nearby May 2021 low at 676. I'm sorry for being a bit vague there, but this is a really very large pattern. The second pattern is more recent, though still quite big. It is the early October 2024 to date rounded bottom pattern. Here I would look to the May 2021 low at 676 as the final of the construction and the start of the breakout. However, there is an argument for looking at the congestion in late October, early November 2024 in the 620 to 635 area, just around where the very slowly declining gold long moving average is situated, which is currently at 634, as being the breakout point, though I am more cautious and would still favour the 676 area. However, just keep a wary eye out for the 630 area just in case. Next we have the bright red bullish shift pitchfork here, the late August to early November 2024 move. Right now the market is between the middle time above, currently at 655, and the lower time below, currently 604. This pattern, in its own way, is supporting the move higher. We also have the market seemingly break up through a major resistance this week. And I'm not referring to the gold long moving average or to the April 2024 low at 635. No, I am referring to the dark blue July 2023 to date downtrend, currently at 626. we are now above that significant downtrend and setting to stabilize over it before a possible further move higher. So what have we in the way above that might change this seemingly significant attempt higher? Well, not a lot. We still have the gold long moving average and the April 2024 low to a certain degree, trying to cap prices, but apart from the April 2024 low, apart from the 50% Fibonacci line up at 670, we have the near to it November 2017 high at 666, interesting number, and a small congestion band 650 to 652 based around the August 2018 high at 650. However, the dynamic rising resistance of the bright red middle tine, that's currently at 655, might be a touch more problematic. Despite these, the topside does seem vulnerable right now. London UK feed wheat. There continues to be, even now, these many weeks, months even, only one major significant pattern on this daily chart, and that is the bright red late May to early July bearish shift pitchfork. The market is right now in breaching the overhead upper tine, currently at 182.30, though it has as yet not been able to fully stabilize over it. Add to this the narrow mix of all, literally all the moving averages between 180.5 and 183.35, as well as the 50% absolute Fibonacci line at 180.5, and you have close together a compacted zone and area that is possibly brewing up for a significant move. I was, as I've said 7 weeks ago and ever since, and I quote, even now still looking for that better pattern to appear. Until that shows up, I'll continue utilizing the bright red bearish pitchfork. End of quote. This leads me to my final 3 points, and they were something that I noted in my recent annual commentary on London feed wheat. Firstly, I saw there the potential for a very large May 2023 to date cat's ears pattern. Now, this is a bearish pattern. It's akin to a double top formed after a big fall down, such as we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These two super long term patterns are still live, and they both rely on one feature below the market, their common neckline, highlighted in dark blue on my daily chart, and that's currently at 167.35. Now the final feature is a little closer to the market but a little more longer term. It is the March 2016 to date uptrend, highlighted in purple on my daily chart, and that's currently at 176.10. Now there is one major, possibly severe criticism of all three of these patterns, and that is that they have previously been breached and arguably broken. However, I have transposed these from my longer term monthly charts here on my daily chart, and what's on a daily and even on a weekly chart, they may be breached and broken. On the longer term monthly charts, where they really live, they are still somewhat valid, and so I would not take these as cast iron lines that should not be crossed, but longer term strategic patterns that we should bear in mind and occasionally keep a very closer eye upon. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.